Good afternoon, everybody. This is Mark. We're back here for the daily recap. I haven't been around for a few weeks. I was on vacation for the last probably 7-8 days, and big moves happened. Now, easy to say, when you're away, it seemed like an easy trade. It seemed pretty obvious. When I went away last Monday, it seemed like the risk-on trade made some sense. Obviously, I know. For those that were listening to the radio, I said I felt like the action was going to be much better. Something just felt a little different. I put on some risk, certainly, but I would have never expected 7-8 days of this type of move into this action. Some of these stocks are definitely getting out of control, but I want to put some things in perspective. So before I go over necessarily some charts I'm looking at, it's easy when you're away. Again, you get a little bit different perspective. And I was away. I didn't look at a chart for 10 days. And the one thing I will say is we've been in a tough range. Understanding that the S&Ps have been hanging in there, big cap stocks have been hanging in there. You definitely have rotation, in some of the oil services, some other industry groups that, quite frankly, aren't as active, aren't as volatile as some of the stuff we trade here on the chat. Some of the high beta stuff has been weak all year. It woke up last Monday was the beginning of that. Maybe Apple was the trigger, Netflix possibly was that trigger, whatever you want to call it, and obviously it hasn't looked back. It hasn't looked back since. But reality, 4 months, 2.5 months, whatever you want to call it, of tough action in the high beta stocks. Just because you missed this initial move in a lot of these stocks, and they're big moves, it's a week and a half of moves. Not enough to say that's all. The key is understanding you're going to get pullbacks, you're going to get digestion, which would be healthier. Don't lose perspective. You didn't miss. You missed maybe the initial move of some of these stocks, but now you're going to get to see digestion. Certainly, better technical charts are going to start setting up. Don't underestimate what type of power this market has. If we can obviously digest some of these moves with some of these stocks, moving $40, moving down $10 to make a higher low is technically a good sign. So you don't want to just haphazardly say we ran too much, we have to pull in. That's not the case. We went too far on the downside. Probably we're ideally going too far on the upside, but we're going to keep getting rotation. And I want people to understand, and as traders, I've seen this so many times, it's 7-8 days of a rally. We could be in this for the next 6 weeks, throughout the whole summer, longer. Understanding you're going to get pops and drops. Perspective is a good thing. Being away, obviously, I see this a lot, and I've seen this type of action so many times. I'm excited about the market again. I think it's more interesting than it was certainly when it was coming down. Obviously, I tend to lean towards the long side, hence why a little bit more of excitement. But I did miss some moves just being away. But I think there's going to be a lot of money coming into play over the next few weeks. And the key is letting some of these stocks come pull in a little bit. Like I tried Apple today. It was the only short against my probably 12 longs. And really it was a hedge. If I was just doing nothing, I would not have just shorted Apple against no longs because this market is too strong for that. And it's showing it. Understanding the oscillators are getting a little extended. And we're due for a pullback here, but not all stocks are going to pull back. And pullbacks will be met by new buyers, and higher lows will be demonstrated on these charts. So just keep things in perspective. I think it's always healthy when you get a little bit of an outsider's look, somebody who's been away now for 7-8 days, rather than looking at your level 2 every 2 minutes. Chart-wise, we got rotation. We got some solars today. Certainly the S&Ps, the IWMs, the Qs, all moved. Netflix, unbelievable move. Lots of basing, 4 or 5 days of basing. Went through to 405 and went back to 415. Looks like some resistance around 420, but it's light resistance. What a move. Apple, seems like it's moving into the split. It's getting a little bit farther away from the 8 to 10 day than I would like. Hence why I tried shorting it, but it's being met by new buyers all the time. Probably is going to run into the split at this point in time. Digestion has to happen. Doesn't mean you necessarily have to buy it, but just respect the fact that that's happened. Twitter obviously made a move yesterday. Ideally, you'd love to see it just digest here for another day or two, possibly make another move to 36. Same thing with Facebook. right here, a little bit, small resistance, another day or two of digesting, probably makes a move to 66 to 68. LinkedIn, I was saying 160 was that level today. I like that the 8 and 21 days are crossing. Looks pretty good. Looks like it actually can move a little higher. I think you have a key moving average at 166. Looks like 170 possibly in the cards. Amazon, same thing. One of the few that is actually still below its 200-day moving average. It's lagging. Gets above 315. Has some room to 325. We know how Amazon works. Definitely plays catch up. That's the internet group. I'm sure I'm missing a few. Tesla's still hanging out there. You had some solar stocks on the move today. SCTY looked pretty good. Still healthy. Somebody asked me why I sold it. Just took a trade. I only had a few stocks I was watching when I was on vacation. I'll do more work tonight to get a little bit better idea of how some of these stocks look. But that looked pretty good, and I believe, CSIQ's caught a little bit of a bid. So did JKS, SUNE from some of the solars. And if somebody called out some of the home builders, they looked okay. I have not really digested or looked at any of these charts in a while. So again, I'm going to do some homework tonight. Keep an eye. The banks, they had a big move. They had a little bit of down move today, but nothing crazy. And digestion. And I think that's where we're at, guys. This market needs to digest somewhere, but not all stocks are going to rest. And 3 or 5 days of basing or less, I think, is enough if the chart is, constructive enough for stocks to keep moving higher. I think that's the tape we're going to be in. You had 4 months to short. It doesn't mean we're not going to go down here and there, because that's the case. You always go down. Stocks always go up and always go down. But I think overall, this market, the complexion of the market has changed. And I just don't want to see you keep chasing, your tail. If you keep buying over the last 4 months and now all of a sudden 5 days into this, all you're doing is shorting, you're doing the wrong thing. The trend is your friend until it's not. And right now, it seemed like something, it seemed like there was a trigger last Monday. I don't think a week and a half of a strong up move is enough to say the trend is done now, just because these stocks moved very much. That's my perspective. Again, I'll be back on the radio tomorrow with doing a lot more homework. My flight was this morning, so I'm a little tired. But all in all, I think this market we're in for actually a decent run and a decent move across the board, a little more conducive, a little more constructive on the technical sense for us over the next few weeks. Hope that helps. I'll talk to you tomorrow. Good night, guys.